Dow Jones and S&P 500 end with cuts amid inflation worries and a mixed bag of earnings, while Nasdaq gets a boost from gains in Nvidia. US consumer rises at 2.7% annual rate, in line with expectations. Asian markets trade lower, while Nifty indicates a negative start for our own Indian market. Crude oil prices continue to fall amid concerns over Trump's 50-day deadline for Russia to end war in Ukraine and potential sanctions. Meanwhile, gold prices take a hit on US inflation data and tariff updates.
We have a couple of those deals that are going to be announced. India basically is working along that same line. We're going to have access into India.
US President Donald Trump signals progress on a potential trade deal with India, says, and I quote, "We are going to have access," unquote, as talks between the two nations gain momentum. He also confirms a preliminary trade agreement with Indonesia, which will impose a 19% tariff on the country's exports to the United States.
For foreign banks, they can go up to 100%. So if you don't allow them even 26%, that kind of seems to defy logic.
RBI Governor says not allowing foreign banks to own a 26% stake in Indian banks defies logic, says RBI will examine cases if any requests are made. Governor also rules out any bank licenses to corporates. And more earnings on the block as IT companies Tech Mahindra and L&T Tech Services along with ITC Hotels are all set to report their first quarter earnings for FY26 today. Good morning in the Mumbai News Center. I am Vamakshi Doria and you're watching Power Breakfast. It's the third session of this week, and let's take a look at what the Asian markets are doing this morning. Well, the screen looks slightly different as compared to what we saw yesterday. Yesterday, of course, it was a sea of green, but today we're seeing mixed momentum in the Asian markets. What's not doing well is the Kospi. It's down almost 0.6%. Shanghai, Nikkei, all of them are down. They're flat, but they're trading with a negative bias. What's doing well, on the other hand, is Taiwan. That index is up almost 0.6%. Hang Seng is another one up almost 0.8%, and this is after the mixed handover that came in from Wall Street. So let's actually recap what happened in the US market. Wall Street ended Tuesday's trading session mixed as stocks react to earnings and inflation data. The Dow slips more than 430 points, while the S&P 500 sheds nearly 25 points. The Nasdaq was an outperformer, posting a record close, adding 37 points. The tech-heavy index was aided by a 4% rise in Nvidia shares after the company said it hopes to soon resume deliveries of its H20 GPU sales to China. Meanwhile, inflation data for the month of June showed an increase from May levels, despite the headline numbers matching expectations. The consumer price index increases 0.3% on the month, putting the 12-month inflation rate at 2.7%. Excluding food and energy prices, core inflation picks up 0.2% on the month, with the annual rate moving to 2.9% in line with estimates. Well, on that note, let's also listen in to some reactions coming in from market experts and economists on the inflation print for the month of June.
If you look at particular categories like toys, furniture, etc., you are seeing a little bit higher inflation than we'd seen in the past. But if you look overall, it's hard to see a big impact yet. And that's the big debate. Is it coming or is it not coming? It's been, this is likely to be a one-off. If you look at, all imports are about 13% of GDP. The tariffs are, they're on, they're off, they're exceptions. And so it's hard to see that it's going to have this enormous impact. And in particular, it's hard to see an ongoing impact. Fortunately, the short-term inflation expectations came down from the elevated levels that they were earlier. And that's really where you have to worry. Does this get into something that is longer term, more into all the cracks in the system? And at least so far, we're not seeing that.
We saw some signs of tariffs in there. I mean, things like, toys and apparel and furnishing, they all moved up more. Those are kind of the things you would associate with being imported from China. What offset that were some other service things, and used car prices that had a seasonal adjustment down. So within that number, you saw the beginnings of some moving up in tariffs. But you're right, it wasn't that the overall number got pushed, but that might be coming in the months ahead. You could see sticky inflation. Be clear, we're not talking about, huge inflation here, but in a world of 3%, that's enough to get the Fed not to move rates. That's enough to keep the funds rate at 4%.
Well, that's all the global market action we have for now. But how will all of these overnight cues impact our own Indian market? We now have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news. Let me first start off by telling you all about how the trade setup looks like. Well, the market has snapped a 4-day losing streak. The Nifty managed to post a gain of 114 points. The sensex too was up almost 317 points, making up for the losses that we saw on Monday. So far going into this week, it looks like a positive start. As far as the broader markets are concerned, well, they continue to outperform for the second straight day. Nifty mid-cap as well as Nifty small-cap index were higher by almost 1% in yesterday's trading session. The factors behind this rise include, the inflation print back here in India coming in below expectations, in fact, at a 6.5-year low at 2.1%. Other than that, progress on bilateral trade talks as the Indian delegation reached US. There is some clarity needed on that, but President Trump has also indicated that there has been some progress. So we'll be waiting for the contours of the trade deal. Other than that, when we look at some sectoral indices, almost all of them ended in the green. Auto, in fact, pharma was also up for the third straight day. PSU banks, all of these indices led the charge. In fact, the top performers on Nifty included auto as well as pharma names, which includes Hero MotoCorp, Bajaj Auto, as well as Sun Pharma. Look at the moves that came in on all of these counters. Today's session, we'll be keeping an eye out on the US Producers Price Index. As far as some earnings reactions are concerned, we'll be watching out for the numbers for HDFC Life, HDB Financial Services, ICICI Lombard. Ria will be touching upon that in some time. As far as results are concerned, today we'll be waiting for numbers from TechM, L&T Tech Services, Angel One, ITC Hotels, and SBI will also be on our radar because a board meeting is scheduled today to consider fundraising plans. The GIFT Nifty will also come up for you on the screens. It will sort of indicate where the markets are expected to open. It's an 89-point cut for now, indicating that the markets may give up at least most of the gains that we saw yesterday. But that's how the trade setup looks like. But let's move on to Ria, who will now list out all the stocks to watch out for in today's trading session. Ria?
Good morning, Vamakshi. Let's take a look at the stocks that are likely to be in focus today. First up, a lot of Q1 numbers have started rolling in. For HDFC Life, the total APE has increased by around 12.5% over the previous year, and the VNB margin has remained unchanged at 25.1% in this quarter. For HDB Financial Services, net profit has seen a decline of around 2.5% over the previous year, but the net interest income has seen an increase of around 18%. For GTPL Hathway, the net profit has seen a big jump of around 69.4% over the previous year, with the revenue going up by just about 5% compared to the previous year. For ICICI Lombard as well, the net profit has gone up by around 28.7% on a year-on-year basis. Moving away from earnings, Mass Financial is also likely to be in focus today. Nippon India Mutual Fund has raised their stake in the company. They've bought an additional 1.1% stake in the company for about rupees 61 crores. Dixon Tech to also be in focus. They've acquired a 51% stake in QTech India via a combination of primary and secondary investments. And further on Dixon Tech, they've also partnered with a Chinese firm to form a JV in India for manufacturing precision tech components. Two other pharma stocks to be in focus. The first one is Zydus. They've received the final approval from the US FDA for capsules that are used to treat arthritis. And for Biocon Biologics has expanded its diabetes portfolio with the US FDA approval of Kirsty. The last one that will be in focus is PVR. The Karnataka government has ordered fixing the price of movie tickets across the state and including multiplexes, and the prices of tickets they say should not exceed rupees 200, and this is inclusive of entertainment tax.
Well, thanks so much for that, Ria. And finally, we now have Mangalam joining in with cues from the F&O space. Good morning, Mangalam. Doesn't look like it's such a good morning for the markets, though.
Well, it's an 80-point downtick. That's par for course given the sort of moves that we've seen lately. The Nifty snapped its 4-day losing streak yesterday. ended about 113 points higher. The good part was it was supported by both the Nifty Bank as well as the Nifty IT index. The IT index has been underperforming in the past itself. Importantly, the broader markets did well, so your portfolios would be feeling better. Nearly 1,800, 1,900 stocks which ended in the green for, about 800-900 stocks which ended in the red, so that's a positive. The other factors that led to this up move, we've been talking about FIs selling lock, stock and barrel. Yesterday, some of that was reversed. They bought about 120 crores in the cash market. DIs bought 1,500 crores. And additionally, two things happened in the futures and options space. The India VIX, we've been pointing that fell about 4.2%. And the put-call ratio, which was at the lower end of the range, from 0.7%, moved to 0.88. What does that mean? That there was call unwinding and put writing. We've been speaking about how the FIs wrote a lot of calls. Yesterday, the market moved higher, and all those call writers were caught on the wrong side. So they bought about 4,400 crores in index options, covered 26,000 short contracts in the calls, and wrote about 17,500 puts. 25,100 call, 25,150 call, both of them come up for you on the screen. Saw some positions being shed, which means it was a lot of short covering. And on the same strikes, we saw a lot of put writing. So 25,200 put writers active for a premium of 62 rupees. 25,150 put writers also active for a premium of 44 rupees, telling you that where the market is likely to open today, closer to 25,100, there is important support. On the way up though, 25,200 call writers still active, telling you that the 20-day moving average still proves to be a bit of a concern on the way up. However, if the market does go ahead for whatever reason and crosses that 20-day moving average and stays there, there is a lot of fuel for further up move, because the FIs, we said, have been 80% short in index futures. So yesterday, what you saw was just a glimmer of short covering in index options. Now imagine what happens if index futures also start to cover their shots. But for that, the Nifty has to stay sustainably above 25,300. Fresh longs we saw on the Piramal Pharma stock. We've been speaking about how the pharmaceutical stocks did well in yesterday's trading session. This one's outperforming over the last 2-3 trading sessions.
Thanks so much for those details, Mangalam. But let's slip into a very short break. Up next, we get you exclusive excerpts from our conversation with the RBI Governor. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC-TV18. Well, in his first television interview since taking charge, RBI Governor Sanjay Malhotra says not allowing foreign banks to own a 26% stake in Indian banks defies logic. In an exclusive conversation with Lata Venkatesh, he promised RBI will examine cases if any requests are made. Governor was asked about this in the context of Dubai-based Emirates NBD Bank potentially picking up a stake in private lender RBL Bank. Here is what he had to say.
There are two foreign banks wanting to buy stakes in Indian banks. SMBC, the announcement from Yes Bank has already come and they are awaiting your permission. Right. Now, hitherto RBI had only given permission to foreign banks to cross that 15% when the bank was in trouble, like in Catholic Syrian's case or in Lakshmi Vilas, where of course DBS bought the whole bank. Now, Yes Bank, you have the odd situation of State Bank having its own banking license and owning 24% in Yes Bank. So, RBI probably wants that to end. But in the case of RBL, we understand NBD is very interested. So what is, first of all, have the cases come to you? And more importantly, if you are going to give permission, like even IDBI is apparently, the interested parties all want 26%. So as a rule, will you want to change from 15 to 26?
See, as per the FDI policy, the foreign banks are allowed up to 74%.
Yes.
All right. And the foreign banks can actually start business in our country 100%. As even up to 100%. So that's even more than 74%.
But they don't want that. They want to get into, established Indian banks.
Yeah, so, Indian promoters are already allowed up to even more than, 26% stake to be brought down to 26% yes. stake within a period of 15 years.
Yeah.
Voting rights, of course, because of the Banking Regulation Act, cannot be, even if the share financial stake is more than 26%, cannot be more than 26%. So even foreign banks can certainly have 26% stake, economic interest, voting rights.
Yeah.
There should not be any difficulty in them having up to 26% stake in a bank, in an Indian bank.
Okay. No, it's just that until now it was only given.
They have not come. So we have not, your question as to whether some cases have come to us for having 26%, they have not. But if they come, we will certainly, we are already reviewing the policy, as you are saying. There is some kind of, clarity is not there, some ambiguity is there, as you are saying.
No,
we'll try to bring in, these clarifications and bring clarity in these guidelines.
Okay. And no, until now at 15%, it was kind of a hard stop. And case by case, Reserve Bank was allowing. So I'm just asking if that 15% hard stop.
As I mentioned to you, for foreign banks, they can go up to 100%. Okay. So if you don't allow them even 26%, that kind of seems to defy logic.
Well, the governor also said policy rates can be cut if inflation forecast is lower than the current estimate of 3.7% or if growth slows even further. Adds that inflation outlook over the next 12 months will be a key factor determining the rate decision.
See, we are in a neutral stance, as you are already aware. So the MPC, this is of course, first of all for the MPC, not for me. But you are right that the MPC has decided to change the stance to neutral. And so what this means is that we can go in either direction. It gives us the flexibility to move upwards or downwards depending on how the outlook, more importantly, rather than the current data which we have now only for Q1. Rightly you have said that it has come down. But how is it going to look like going ahead? And we do our own internal assessments. Whether it will be 3%, I really don't know, because those calculations we are still in the process of doing them. We will certainly come out with our latest projections. One can't really say that it is inflation which is more important than growth numbers. For us, as you are aware, it is primarily we look at price stability. That is our core mandate. That is the primary objective. And then we look at growth also. Both are equally important. And I would not say that, we would give more emphasis as of now to either numbers. We also need to be aware of the composition of the inflation, and especially when I say composition, I mean, the momentum and the base effect. Current inflation is known. Of course, that is known. That's not an outlook. That's not an estimate. That's more or less, reasonably certain. And so that does feed into the outlook. But it is the forward-looking outlook which is more important.
Well, moving on then, let's get you the latest on the trade front. Donald Trump has signed a trade deal with Indonesia where the United States would pay no tariffs to the Southeast Asian country, while Indonesia would have to pay 19% in tariffs to the United States. Listen in to what the US president had to say on this.
We made a deal with Indonesia. I spoke to their really great president, very popular, very strong, smart. And we made the deal. We have full access to Indonesia, everything. As you know, Indonesia is very strong on copper, but we have full access to everything. We will pay no tariffs. So they are giving us access into Indonesia, which we never had. That's probably the biggest part of the deal. And the other part is they are going to pay 19%, and we are going to pay nothing. I think it's a good deal for both parties. But we will have full access into Indonesia.
Well, as Trump spoke about the trade deal with Indonesia, he also signaled that something along the same lines would take place with India. Let's also listen into that.
We have a couple of those deals that are going to be announced. India basically is working along that same line. We're going to have access into India. And you have to understand, we had no access into any of these countries. Our people couldn't go in. And now we're getting access because of what we're doing with the tariffs.
Well, Donald Trump's criticism of the Fed Chair Powell continues. He says the Treasury Secretary Bessent is an option for the next Fed Chair. Let's also listen to that.
Scott Bessent, your Treasury Secretary, your number one option whenever Jerome Powell leaves, or
Well, he's an option,
is he your top?
and he's very good. Well, he's not, because I like the job he's doing. Right. That's why he's not been developer. I like the job. I don't know if he was on the plan. Was he not the plan? Maybe he wasn't. But I do like the job he's done. Right. So in that sense, probably he's not that much of an option. Right. Scott's been great. He's been terrific.
Well, that was the US President Donald Trump. But let's slip into a very short break. Up next, we get you cues from the commodities market. So don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC-TV18. We now have my colleague Manisha Gupta joining us with all the updates from the commodity market. Good morning, Manisha. So what's on your radar?
Morning, Vamakshi. Thank you so much for inviting. Well, I'll start with the crude oil prices first, because we've seen it snapping 2 days of a decline. There is improving demand signals from US and China. OPEC also projecting a strong global economy in the second half on the back of rising demand from China. India, Brazil has been keeping the prices on the higher side. Also, then you're looking at a strong summer travel in the Western world. There is a rise in gasoline consumption. So everywhere that you look, there is some kind of a support that you've seen come in for the crude oil prices, is the reason it's still holding $70 per barrel mark. What we have seen profit taking come in, though, has been the metal as a sector. Silver has retreated after 14-year highs. Prices did decline 1% in the overnight market. Well, it is profit-taking after that recent run-up, and then there are tariff concerns on economies as well, which seems to be weighing onto the space. And that's exactly what we have seen for many of these other metals also. It has been a decline in copper prices overnight. Aluminum, zinc also have seen a bit of a decline. Even iron ore prices, which had been gaining most part of July, have seen decline in the overnight markets. It also has to do with the dollar index, which is trading now at 98.5. A bit of a gain there is what seems to be weighing on many of these commodities.
Well, thanks for that comprehensive update, Manisha, and thank you so much for joining in with us. But that's all we have on this edition of Power Breakfast. We're leaving you with the Gift Nifty indicating a negative start for our own Indian market, 88-point downtick. Don't go anywhere. Bazaar Morning Call comes up next.